America's subprime mortgage meltdown is still recent history, but that's not stopping investors from buying property in the United States at rock-bottom prices. Despite the continuing fallout from the global financial crisis, the Australian arm of Citi is helping to arrange mortgages with its US parent. But analysts warn there are huge risks involved and investors will need to have deep pockets. Emily Stewart reports.
It might sound like a risky business, but 45-year-old Declan Hickey bought his first property in the United States 2 years ago, just after the subprime mortgage meltdown. Since then, he's grown his portfolio to more than 10 properties.
I was not happy with the returns that I've been getting in Australia, and America at the time was looking like a great place to invest because of the bargain prices and the fantastic rate of return that you get on your cash. So it was a no-brainer for me.
If you cash out a high Australian dollar and buy US real estate at rock-bottom price, it looks like a pretty good investment today. I'd say US housing is a buy for people in Australia.
Many agree. Since the global financial crisis, the investment bank Citi Australia has had so many customer inquiries about getting loans for US property that it's now offering a service to fast-track loans through its US arm.
We will assist customers who don't have a social security number but who do want to invest in the US property market to access funding through our US business.
But investment in US real estate is not for the faint of heart. Property prices in the US fell from dramatic highs in 2005 to a low point in 2009. And in some regions they continue to drop. The Case-Shiller House Price Index shows prices fell in 17 of the 20 cities surveyed between December and January.
Right now, if people are buying property in the US and in a distressed state, and if there is excess supply, that would suggest to me that it's not on its way to increasing in prices where demand starts to outstrip supply. So that's really the issue. When does demand start to outstrip supply? That's when the recovery starts. I don't think that is the case right now.
Hundreds of properties are listed on internet sites and magazines, spruiking US properties to Australian investors. But Delia Rickard from the Australian Securities and Investments Commission's personal finance website, MoneySmart, says be wary of property scams.
You need to think about what are the hidden expenses here. What taxes will you need to pay back in Australia? You know, what will the property taxes be there? What's the insurance like there? Management costs, ongoing repairs. So often these sort of offers seem fantastic, but if you don't do your homework, you might find that they really were too good to be true.
The big risks in buying in the US involve fluctuations in currency and movements in interest rates in the property market. And the tyranny of distance certainly comes into play too.
You need to make sure that whoever you buy off can actually manage the property for you. So that is key to enjoying good rental returns coming in.
So while for some US property could be the key to unlocking good investment returns, it's still very much a case of Australian buyers beware.